to request that you stay on mute until it is time for us to go into questions and answers. And we are officially live streaming now. And as a reminder, welcome to our Small Investments for Program Success budget training. If you received an invitation to this, it may have been because your previous application didn't make it through our first review round due to it being incomplete or maybe out of compliance or not having a full budget. Most of those individuals that didn't make it to the review round, it was because they did not include a full budget. So with us today is our executive director, Ms. Sika Rose Green, and we're going to walk through a fairly brief yet what we believe is an informative budget training. And this is specifically around how you show us your annual operating budget. And with that, I'd like to turn it over to Sika.
Good afternoon, everyone. I am doing a quick screen swap so I don't look so crazy. And perfect. All right, awesome. Excellent. Now I can see everyone. So thank you so much for joining us at this training. And so we appreciate that you all applied for funding through SIPs, our Small Investments for Program Success. And as we were looking at those, some of those we had to disqualify because they didn't meet the minimum qualifications. And a lot of that was because of the requirement that you submit an annual budget, an annual operating budget. And it dawned on us after we saw it repeatedly that maybe there could be some capacity building around what an operational budget is, what an operating budget is, and why it is important that even as a smaller nonprofit that you have one, particularly because as an IRS designated nonprofit, and you have to do your 990s depending on how much money you are actually bringing in and expending, it's just very important that you have a clear understanding of money coming in, money going out, and that at the end of the year as a nonprofit, you should either show a break-even budget or, depending, you might have a deficit budget. But at no point should you be showing a budget that has a surplus. So instead of impeding on our partners, our capacity building partners, UPHS, and I see Amber and LaShawn both on, I thought I would stretch my presentation chops and just give you a very basic training on operating budgets so that when we open up this next round of SIPS funding, you will have a good handle on what it is that you should be submitting. So we'll jump right into it. So entities that want to apply for SIPS funding must meet these minimum qualifications. So you must be a 501c3 nonprofit as designated by the Internal Revenue Service, and we ask that you upload that letter or that proof from the IRS. You must have a total operating budget at or below $100,000. And I'll go into that a little more in the presentation, but basically what that means is your revenues, money coming in, shown on your budget should not be more than $100,000, because at $100,000, we consider those small nonprofits. And you must submit your entities, your organization's current operating budget. And we'll talk more about that in the next slide. So what is an annual budget? An operating budget is a financial document that provides an overview of how your entity plans to spend your money during your fiscal year. It breaks down your revenues, which is all money that comes in, and your expenses or your expenditures, which is all money that goes out, which gives you, your board, and any organizations to which you apply for funding a picture of your financial standing. That is why it is so important, and that is why we ask for it. It is essentially the financial reflection of what the entity, whether you are a nonprofit, a business, a corporation, quite frankly, if you are a service organization, I'm a member of a sorority, and every year we put together an operating budget that shows the money that comes in from dues, subscriptions, all of that, and then how we're going to spend that money. And how, and so it shows what you expect your costs are, what it takes for you to do your business. In the case of you as nonprofits and human services, particularly the children, youth, and families, what it costs you to provide that service, to pay your staff, to deal with any travel, to deal with any occupational expenses you have. And it is during a 12-month period. So it is during a 12-month period, irrespective of what your fiscal year is. All right, next slide. And Gazoon type, Holly. So at a minimum, when we look at standards for budgets, it should, one, include 12 full months of operations, even if you only provide service during a short period of time. So even if your organization only provides services for 6 months out of every year, you should still be showing an operational budget of 12 months. Now, you and only you, through your bylaws, can decide what your fiscal year is. It varies for different entities. Some organizations use a calendar year, which is January 1 through December 31st. Some organizations use the state fiscal year for Florida, which is July 1 to June 30th. Some use the federal fiscal year, which for Florida, counties, cities, and us as the CSC use a federal fiscal year of October 1st through September 30th. And there are even other iterations of that. There are some foundations that use April 1st through March 31st. So you in your bylaws should have defined what your fiscal year is. And when you do that, your budget will start at the beginning of that fiscal year on day 1, and it will end at the end of that fiscal year on day 365 or 366 if it's a leap year. It should include all estimated revenue sources. So whether it's a gift, whether it is a donation, if it is a grant that you have already received, it can even be a grant for which you have applied other than CSC funding. What do I mean by that? So you applied for CHSP, which is through Leon County and City of Tallahassee. So you are building that into your budget. The only funding that you do not include in your operational budget for our purposes is your SIPS request. So you do not include that in your revenue. Let me talk about self-funding. So there are several small nonprofits where you are funding it yourself. You go on your bank account and you pull out money and you fund it, you pay, you do whatever that is. That is absolutely acceptable. However, you need to show that in your budget. So while you have been self-funding your organization for all these years, you still need to have a fiscal year and estimate what your contribution to your organization is going to be. Example, I have a nonprofit that I have decided after looking at my finances, I'm going to fund it at $10,000 for the year. So that line item under revenue says CSC self-funded $10,000. If that is the only money that I plan on using for my organization for that year, then I am going to budget against that money. And when I get to expenses, I'm going to think about how much of that am I going to apply to the rent of my organization? How much of that am I going to apply to the upkeep on my car? And so on and so forth. Let's say I'm going to do self-funding, but I also found out that Amber personally is going to give me a donation of $100,000. So now I have two lines in my budget, one for Sika's self-funding and one for Amber's $100,000 that we don't know where that's going to come from, but that's there. So now my revenue is $110,000 and my expenses will balance. Again, I know we all do need friends like Amber. My expenses will balance against that $110,000. So include all estimated revenue sources in your revenue. Then you're going to include all estimated expenses and expenditures, rent, occupancy, electric, utilities, licenses that you may have to get, mileage on your car. If you're using a lease, the lease payment every month annualized. Any program funds. So if you're going to give gift cards to your program participants, that would be a line item in your expenditures. If you are going to purchase food, that will be a line item in your expenditures. If you are going to take them on field trips, that would be a line item in your expenditures. So that is how you are able to see what you think you're going to spend versus what you bring in. And then the last thing is you want to show the difference between your revenues and your expenses. That's your profit or your loss. So if the total revenues is 110 and my total expenses is 100,000, then I have a profit or a surplus of $10,000. If my revenue is 110 and my expenses are 120, then I have a deficit of $10,000. And I'll show you an example. We're going to show you a budget example. Next slide. So let's talk about best practices for budget preparation. And let me say, they include, but are not limited to, these 5 things. Identify your fiscal year. We talked about that. If you do not have a fiscal year identified, that is the next thing you need to do when you get off this call. Get a fiscal year identified, get that put in your bylaws, get your board to approve that. While we're sitting here, let me say this. If you are a 501c IRS nonprofit, you should have a volunteer board, whether it's 3 people, 5 people, 10 people, 33 people. Your budgeting process should start anywhere from 4 to 5 to even 6 months before the end of your fiscal year, because you are looking at your patterns of spending in order to create that budget. That budget should be reviewed by your board and approved by your board prior to the beginning of whatever your fiscal year is. Let me say that again. That is your checks and balance, so that your board understands what your proposed revenue is, what your proposed expenses are, and if you have a deficit, that's what they have to help you close. Second, itemize all your revenue and expenses using separate lines. So let's go back to the example I just did. So if I am going to be self-funded, I have a line for self-funding at $10,000. Amber got a big inheritance and she decided to give me $100,000. So that is a donation, $100,000. I just found out I got a grant from Amazon for another $10,000. So that is a separate line. So in my revenues, I have 3 forms of revenues in my budget. I'm self-funding, Amber's donation, and Amazon. So that's 10, 100, and what I say, 10 or 20? 20. So we now have $140,000 in my revenues. And for every revenue stream you get, you want to have a line item so you are very clear about that money that comes in, which brings me to restricted revenue. So when you are in a nonprofit, Amber might say, I'm giving you this $100,000, but I want it all to go to services to children, youth, and families. I don't want any of it going to salaries. I don't want any of it going to a rental car. So that is called a restricted donation. You should create a separate spreadsheet for that donation so that you can ensure that you deal with the donor's intent. And UPHS has a whole, they can give you all the training you need when you start getting into restricted items. But it is important that if a donor gives you money with a specific use in mind that they verbalize to you and put in writing, you need to make sure that at the end of your fiscal year, you can show them the documentation that you spent it the way in which they intended for it to be spent. Number 4, for nonprofits, the difference between revenues and expenses should balance to 0. So in other words, you should present what's called a balanced budget. CHSP absolutely requires that you present a balanced budget. In their application portal, you can't even submit it if the budget is not balanced. For us, we have not been strict on saying that you had to have a balanced budget because we believe that if you are an IRS nonprofit and you are required to do a 990, which I believe you have to be up to, it's either $500,000 or $750,000 in revenue. So if it's under that, then you may not be required to do a 990. However, I suggest everybody do it so that your nonprofit status does not come into question. But when you do that, you should be showing a balanced budget. And normally, if you have surplus, you can have an investment account or a money market account or a fundraising account or some other account that you can transfer that money into, but make sure your bylaws allow you to do that. But you should be showing a balanced budget. And then, as we said before, you should be using your budget to reconcile your monthly expenses every month so that you are very clear on where your spending is. And if you need to try to get additional revenue, you can do that. Or if it looks like you're going to have a surplus, that means you can maybe add some more programming to be able to spend that money. Now, we're going to stop sharing and show you where do I work? CSC, that's where I work. Children's Services Council of Leon County, that is where I work for the last 18 months. We're going to show you our operating budget. And this is not anything that we're talking out of school. This is publicly available. It's up on our website. And we just had our council decide on the millage rate. So if you look at our budget, you'll see the first line is a prior year fund balance. All that is an estimate of what we think will be in our account as of September 30th that is not already encumbered. Meaning, when we awarded programs this year, we also pulled that funding out and put it in reserves because that funding is going to be used to pay those programs throughout the next year. Outside of that, you'll see I've got 3 lines for what my prior year fund balance is. I've got my annual reserves rollover. We've got our carryover programmatic funding. That's the funding I was just talking about. And then we've got our carry forward for operations. So right now that comes to 8.7 million. We subtract out the programmatic, subtract out the reserves, and we have an actual fund balance of $1.8 million that will carry over and be put in our operating budget. The next revenue stream we have is the ad valorem taxes, because that is the only way that CSC Leon is funded. Statute requires that we fund at 95% of the estimate, which we did. 7.6 million, we're using the 0.3477 millage rate, and we have our money in a bank. We got it in two accounts, a bank and a money market. We estimate that the interest that money will gain is 2%. So that is 152,000. When you add those two lines together, you get 9.6 million. $9,633,960. That is our total income. We are not expecting anything else. We're not expecting any grants. We're not expecting anybody to give us any money. We couldn't take it if they did. So that is our total income. Now, our job is to estimate what our expenses are going to be. And the next several lines are the expenses. So we've got our reserves. Our council passed a reserve policy at 10%. So that's what you will see in our reserves. We have our compensation and employee benefits, health insurance, life insurance, payroll taxes, retirement contribution, and salaries. We get a subtotal right there, 637,000. Now, we also have some staff, some contracting, because we're a small staff, so we have to do contracting. So our accounting services, our general counsel and legal, and then we have contract staff. That's 294. Then we have other contract services that we have to provide. So that is our independent audit, which we are required to do every year. And we have a payroll processing company that does all of our payroll. That cost is there at 24,000. Then the county property appraisers and the tax collector charges us to collect the ad valorem taxes. So the ad valorem collection fee is 152,000. We have to pay for trim advertisements, which you should have seen in this Sunday's paper. That's another 2,000. And then as a special district, the state requires that we pay $175 every year as our fee. That total 154. Then we've got communication. So we've got our business cell phones. We have to pay for internet and voice over IP. And then we have to pay for the platform that we use for our website. That total, $6,200. Then we have dues that we pay. We pay to our state association, FACT. We are a proud member of UPHS. There's that money. And we are also members of all three chambers, because business and human services have to work together. There's that money, 22,000. Now we've got information technology, because nobody can do it without computers and everything else. So the computers are equipment rental. We don't own any of the equipment in this building. We rent that. We have the website, and then we've got our software package, because each of us has our own email address and all of the things that come with that Microsoft subscription, $21,000. Now, as a business, as a special district, as a nonprofit, you need to have insurance. You are dealing with people's lives, children, youth, and families. You want to make sure that you are covered. So we have liability, directors and operators, workers' comp, and cyber insurance, $20,000. Occupancy. We are fortunate that our occupancy covers utilities and janitorial, lawn maintenance. So we pay one price in rent. We bought all our furniture last year, but we just put 500 in just in case we got to buy a file cabinet. And then we have a security system. So that all goes to occupancy. Now, office supplies and support, because you got to have Post-it notes and all of those things that go along with it. You might have to mail something. We're definitely printing and copying. And then we contract with a shredder, because these documents don't need to be sitting out in the landfill where people can just pick them up. $3,800. Now we have travel. So we have conferences that we attend, lodging, meals, transportation, mileage, and tolls, $20,000. Then we've got miscellaneous, because we give awards out to council members who are leaving the board, and we have what's called CSC awareness. So that's all that swag and stuff that you give out when you are tabling. So as you see, we've got a subtotal of our expense at $2 million. We also did a calculation of our administrative expense. Now, that is something that comes into play when you apply for priority funding. We do not cap that for CSC funding because you are only applying at $100,000. We are not then going to come back and make you have to have an administrative piece under a cap on your admin, because most of you are doing the work yourself. So yeah. So then the last of our expenses is the money that we spend in programming. And that is what you see here. So our family resource centers, what we did for family strengthening, and what we did for youth mentorship, you'll see the totals there, the 4 million, the 21, 2.1 million, and the 800,000. That is money that is being carried over into next year from this year. It's being carried over and does not figure into this budget, because it figures in, but it really doesn't, because we show the public a one-year budget. That's what we show them. Then we've got expenditures in early learning, summer bridge, prenatal, going all the way down. You'll see the amounts that are attached to those expenditures. And then we've got money that will be available for new programming, and that's that $3 million. So when you subtotal your program investments, we get $7.5 million. And when you look at our total expense, 9.6. If you remember and go back up to our revenue, 9.6. So we are showing a balanced budget. As a state entity, we have to show a balanced budget. As a local government entity, we have to show a balanced budget. So this is a really good example of an operating budget. It is available on our website because it's public record. It's what the public has to know that we're doing. And so we thought this would be one of the best depictions, and it is way more detailed than any of your budgets would ever need to be at $100,000. So let's talk very quickly. What am I doing on time? Okay, I'm doing good. On notes for your applications, for your budgets, not your applications, your budget. So the operating budgets must be $100,000 or less in total revenue for your organization, not just the program for which you are applying. Example, I got $200,000 in revenue. I got $150,000 in expenses in all my programs, but the one that I want CSC funding for. So when I balance those against each other, I get $50,000. And in my mind, that 50 is what I want, what I have for the program that I want to use CSC. Can I apply for CSC funding? The answer is no, because my total revenue is $200,000, which means that I am not eligible for CSC funding. Okay? Your total revenue, your operating budget must be $100,000 or less. You do not, again, do not include your CSC request in your budget. So if you give us a budget where your revenue is $100,000 and you have a line in there that says CSC applied for $15,000, you will be disqualified because you have just shown that your revenue is $115,000. Let's say you give us revenue of $50,000 and then you have a line in there for 15 CSC applied for. You will be disqualified because you cannot show your CSC request in your operating budget. Be explicit in your budget to ensure that CSC Leon can see how the requested amount does not supplant existing resources. What does supplant mean? It means that you have a funding source for what you want to do, but you want to use that money for something else. So you come to CSC Leon to ask for money to replace the money that you want to use for something else and use that money to buy teddy bears for the kids. That's the planning. Or you already have a funding source. So you want to use our money to put on top of that funding source just to take the place of what that money is doing. CSC Leon money is designed to expand on what you're already doing or to help create something new that is needed in your community, in what you do for your program that does not already exist. I'm sure there are going to be questions on that. All right, next slide. So now that's a down and dirty. It is as simple as it gets. The slides will be available afterwards, but I know that there have got to be some questions. So we will take the rest of this time. I'm gonna pull y'all back over here, I think, and answer any questions that you have, because I'm sure that you do, on this presentation. We will make the presentation available. I mean, we're streaming live now, but we'll make it available on YouTube. And then prior to or once the next SIPS application opens on October 1st, then our partners at any UPHS are available to help as well. So Holly, I'll turn it over to you to help kind of go through any of the questions we might have.
Thanks, Sika. I appreciate it. So there's kind of two ways that you can submit your questions. One is that if you drop them in the chat, we can take that time. We've tried to respond in the chat directly to your questions, but we'll also do them audibly. Also, if you want to raise your hand down at the bottom. So if you're on here, there's a little place that says raise hand, just click that, and then I can take you off mute and you can ask your question. If you want to hang on for a little while after we conclude today's training to ask a very specific question, maybe related to yours, we will stick around for a little while to be able to kind of field those questions, but while we're not recording. And so I just wanted to kind of put that out there. I do want to reiterate that SIPS, the next round, opens October 1st. That is Sunday. So come to our website and you'll be able to click on the little button and it will take you and it'll actually open up. And then tomorrow or on Friday, there'll actually be the template that you can download. It looks very, very similar to the one that you did before. We have made a couple of tweaks based on feedback from applicants, as well as our council. So a few minor changes, but really just to help explain each of the items a little bit better so that as you're responding to them, you'll have more in your toolbox. So questions we've received so far is the session being recorded? And the answer is yes. As Sika just shared, the link will be in that SIPS portal for you. The next question was, how much depth of detail do we need to make the line items? So for example, is workshop supplies enough, or would I need to itemize and price out each supply type? Sika, I gave a kind of a generic response, but if you'd like to respond to that, please do so.
So I would say that as you're building your operational budget, be as detailed as possible. And if you're building it in Excel and you know how to use the formulas, you can then collapse it. For our purpose, we don't have to know every little supply that you in that itemization. For us, it would be workshop supplies and then what that amount is. What we're trying to do is not only get you ready for SIPS funding, but hopefully help you in your organizational management as well. So I would say be as detailed as you can for your purposes. For our purposes, you can collapse all of the detail up and give us the main line item along with the amount. And if you want to put just over there workshop supplies for 12 months.
I'll add on to that's for your operating budget. Again, this training is how you build your annual operating budget to kind of show what you have without our assistance. When in your application, there is a section of the portal that is about the budget for how much money you're requesting. Many of you, if you did program development or program funding, then most of you asked for 15,000. I think there might have been a couple of you in the sponsorship category, which was capped at 5,000. In each of those examples, there's a separate section in your application that asks you to say, how are you going to spend the money? And it does have that built kind of like a budget. In those examples, we do want to understand a little bit more of how you derived at the amount that you're requesting, because that's the part that we're paying for. But to Sika's point, for your operating budget, that's really your tool so that you're able to track your income versus your expenses as you continue to move forward with programming. So I just want to be very clear about that. The next question was, what will the closing date be for the October 1st grants? It's October 31st, so it's open the entire month of October. This is our quarterly SIPS program, which means that October, January, April, July is when each round will open and be available. And I point this out to kind of let you know that even those entities that made it past or made it to the review category but was not selected. So in total, there were 22 that made it past the initial review that kind of qualified, if you will, because they had all of their pieces. Of those 22, only 10 were funded. That means that those other 12 are eligible to apply come October. All of you who are with us here today, if you also apply, chances are not all of you are going to be funded. Each quarter, we've allocated approximately $150,000 to fund these. But if you don't receive funding, you can apply again the next round. So even if you don't get funded this round, even in the October one coming up, you can still apply again come January. Sika, this is coming to you. If we have an existing program and the SIPS funding is for a new program, do we show the operating budget for our primary program?
The operating budget is for your entire entity. It is for your entire operation. If you are requesting SIP funding for a new program, then in your request, the budget that Holly just talked about, you would fill in each line for what you're requesting and how much. And in that detail, you say how you got to that number. So if part of the program is tutoring and you're requesting tutoring supplies, you would say books at 15 times 15 equals. So you would provide us detail for that programming. But your operating budget is your entire entity's budget. Your entire revenue balanced against your entire expense.
Thank you, Sika. Ms. O'Rourke?
Hi, yeah, really quickly. Our program had to do with domestic violence training and workshops in the school. So I was thinking I would have to look ahead. We could only start probably in January or February if I make a prediction. If we were lucky enough to get funded October 31st, you'd probably decide sometime in November. The funding would start in December. So
the funding would start in January. So how it
start in January.
Sorry.
Okay, so we would have to plan to do something maybe the end of January when we get to start.
And you would have 6 months.
Oh,
I'm sorry, Sika. I'll apologize.
No, it's okay. You have 6 months. So if you were to apply in October, we get everything compiled in November. We present it to the council. They look at all the applications. They make a decision the third Thursday in December. We try to have that money out to you before the end of December 31st. But at the very latest, January 1, you have from January 1 until June 30 to use it.
Okay. Just thinking of the school year. Thanks.
Awesome. We have a question from Mr. Cave. I'm understanding this meeting, but not fully. Is there any way we can do a one-on-one, or do we need to hire someone to assist? This is new, but I'm getting better at training and trying to apply what I'm being taught. Does this make sense? Yes, Warren, it does. Do I take video and try to get assistance to help me? Sika, I can answer that for the first part of our team is available to while we're going through the SIPs process. Once we open SIPs on October 1, we will have an informational session that is on the entire SIPs process and the application portal itself. And our team does provide some assistance. What we don't do is we won't help you build your budget. Like we don't have that capacity. Now, while we do have a contract out there with NE and UPHS, it's for for kind of like that one-on-one training. It's really for our priority funding and not our SIPs cycle. However, NE has made a lot of their trainings that they have done, which help with a lot of kind of alignment, developing certain pieces, understanding data collection, all that. They've made all of their trainings available online and will continue to lead them up. And I'm pretty sure you're already a member of UPHS. And I know that Amber and LaShawn, who are on here with us today, are very, very capable and able to help with some of those questions as well. They definitely know how to build budgets. They know how they understand our theory of change. And so we're very pleased to have them as a partner. But I do want to suggest that if you're not currently a member of either of those organizations, if you're not currently a member, our capacity building contract with them is for our priority funding and not the SIPs. I just wanted to clarify that.
And so, of course, the video will be available, Warren. But let me also say, Google is a powerful tool. And you literally can Google building an operational budget for a nonprofit, and it will come up. They have templates. A lot of it is for free. But yes, so everything Holly said, but yes, I don't think there should be a need to pay somebody to do it for you, even if it's a friend that just knows finances, because this is really no different than a household budget. Your household budget, you know what you bring in every month, and you put that down on a piece of paper. And then you look at everything you got to pay. So I got to pay rent or mortgage. I got to pay a car note. I got to pay for them kids. I got to pay after school. I got to pay. And at the end of that, you add it together and you subtract it from what you made for the month. That's an operational budget for your household for the month. Think about annualizing that. So I'm going to look at what I make for the month, multiply times 12, and all of my expenses for the month, multiply times 12, do the subtraction, and that tells you what you have at the end of the year. It's the same concept.
The next question came from David Van Williams. So we would have to provide an additional operating budget for how the SIPs funding will be used, specifically for the new program. I want to point out, Amber from UPHS is like, hey, call us. We're going to walk you through this. Again, we will go through the budget request process on the training on how you submit it for the portal. So let's just say that your annual budget is $50,000 without SIPs. That's your organizational annual budget. That's what we're saying you have to include to be eligible for consideration. Then when you say, okay, I'm eligible, this is what I'm asking for funding for. There's a section where you say, I'm asking for $15,000 or $10,000 or $5,000, and you're going to say, this is how I'm going to spend it. So it's kind of like an operating budget for that funding. So earlier when Sika was talking about restricted funding, what you propose to spend that $15,000 for will then go into your new annualized budget. So kind of adding it, she said you can add it as a separate worksheet, you can add it as a separate column so that you see where the funds go in. I hope that answers the question. And again, I want to reiterate Amber's offer for assistance. And then I'll come back to you, Ms. O'Rourke.
Before Kelly speaks, let's go back to David. David, the operating budget you upload. When you ask for the money, it's going to say, how much are you requesting? I'm requesting 15. And underneath, how do you plan to spend it? That is the operational budget for your request, and that request is now restricted because all of the money that you request if you get it, has to be spent the way that you told us you were going to spend it.
Yep. Kelly.
Okay, Kelly, I'm sorry.
No problem. So helpful. You said you tweaked the web a little bit. One thing that I noticed is that I felt like there just wasn't enough space, enough characters allowed for me to explain what we wanted to do. Maybe that's because I'm, as an FSU researcher, I'm used to writing gigantic, detailed grants. So I felt like I was dying to explain more why it's important and what we're doing, but there just was, I had to really succinct it. Any chance of lengthening it a little bit? I know you don't want to read 12 pages from everybody, but.
Yeah, so Holly, I'm gonna jump in on this one. There are two schools of thought. One school says you should allow them to type as much as they need to get the point over. The other school of thought is, if you can't tell me in this many characters what you need this money, how you need this money, then that means you aren't doing a good job of boiling it down to be very direct. For CSC funding, we need you to be direct. So if I am requesting $15,000 for a youth mentoring program, it's direct. I am going to spend $50 on gift cards times 5 youth for this. I'm going to give the youth mentor stipends for this. There is a portion at the very top when we ask you to explain what the program is. That's where you can get a little more detail, but even then, these applications are being read by our council members. We only go in and look to see if you are eligible. We look for those 3 things. Is the budget 100? Is the operating budget that was submitted $100,000 or less? Did it not include CSC? Because remember, it can't include CSC. Are you a nonprofit as designated by the IRS? Did you upload that documentation? And do we see where the program you've proposed falls under one of these categories? If it's a yes to all of that, we package it up and we give all of the eligible ones to the council, who then reads through. These are very busy people. They do not have the time to really delve into a long narrative. So it is important, just as a program, to be able to boil down what you do to just a couple of lines. So we may increase it a little bit, but it will, I don't think at any point it'll be more than maybe 750 characters. Maybe.
Oh no, it's more than that. I think it's 2,000 characters.
2,000.
I think it's 2,000 characters.
Yeah, so I don't see us going up to even 5,000. If we go up, you might get 220, 2250 maybe.
I will say that we did provide a little bit more clarity for what we want in each section. Some of the applicants, you found yourself repeating yourself and answering the questions. So the very first one is tell us about your organization and just what is your vision, mission, how long you've been doing business. You really should be able to do that. And
succinctly.
Ideally 500 words or less. I would say 100 words or less. There's a challenge down at the Sun Sentinel in Broward County, and it's 100 words, and you get 100 words, and it's in their newspaper to talk about an issue that's important. All you get is 100 words, and it's a really great exercise to help you really distill down what your mission is and to target how you want to spend something or what kind of call to action you have. So I would really challenge all of you to kind of get that elevator speech. And be able to deliver that on talking about your organization. Then the second request is how much money are you asking for and what do you want to use the money for? And that's specifically I want to start a youth mentoring program because the families that we're serving are experiencing XYZ, right? And it's not, you don't have to use that to say how you're going to spend the money. It's why do you want the money? What are you going to use it for? What change are you hoping to exact? Then when you get into the budget, then you're able to say $50 for this, $100 for this, $1,000 for this. And so being targeted about answering the question that's asked instead of putting it everywhere. And again, we'll go over this in this reading.
Yeah, we will. And the last thing I will say is don't waste characters on spitting data out to us. So don't waste your characters by saying the 1920 census report said that this so-and-so and this census tract. No, I want to do mentoring services in this census tract because the poverty rate is 59%. Bingo. You don't have to go, so we want to be, if this is not a time to be flowery, this is a time to, so it's a little different than maybe what you're used to as a researcher.
I squeezed it in. I managed to keep cutting it, but
Good. It's great exercise for you.
trying to tell you guys how important it is. Thank you.
Any additional questions at this point? I don't see any more in the chat.
All right.
Well, thank you all for joining us. We really appreciate it. I'm going to end the recording now. Thank you, everyone.
Thanks, everybody.
I said I was going to do that.